Well, it's risk-off that's playing out today on the Lal Street. In fact, one of the big losers is Hindalco. Jefferies has come out with a note. They have retained a hold rating with a target price of around 390 rupees per share. Valuation-wise, they say the stock is trading at around 0.9 to around 1 time odd. And on a 10-year average, it's traded at around 0.8 times. You know, when in the peak of crisis in the past, it's even traded at half a times also. Valuation-wise, they believe it's not yet very, very cheap. They highlight two factors. One is the slowing can demand and also falling aluminium prices. Both those two factors could hurt their businesses. For the can demand, it's going to hurt the Novelis Aleris part of the business, and aluminium prices was directly correlated to the domestic business. First, on the can business, Ball Corporation, that's one of the leading beverage makers out there. It's one of Novelis's largest customers. Now, they had shut down some of their capacities in early September. And Jefferies, in a note as well, had said that they're a little bit skittish because of that. Now, Ball has gone ahead and they've lowered their 5-year volume CAGR outlook by a couple of percentage points. In North America, from around 4 to 6%, they've lowered it to around 2 to 4%. South America, they were earlier guiding for around 5 to 8%. Now they've lowered it to around 4 to around 7%. So that's about, the can business getting into a bit of a dizzy. The other factor is the aluminium business. Remember, aluminium prices have seen a sharp downtick. And they are anticipating that the EBITDA per ton of the aluminium business, that's alumina and aluminium put it together, in the past quarter, it was more than $1,300 per ton. They are factoring in the next couple of years, it falls to around $730 to around $790 per ton. So that's a large decline that they have factored in. They had come out with a note earlier in September and they had given a heads up that yes, they're cautious because of these factors. And it appears, at least as of now, things are playing out in that manner itself.
All right, Nigel, so that's about Hindalco. But meanwhile, we do have a couple of other stocks which are buzzing around as well. IT could be one of them. But what we'll do is actually take a short break, come back. All right. Vivek is joining us to tell us a little about Power Grid as well. Vivek, second day running, we're seeing a big cut on that stock.
Well, absolutely right. Friday, the stock fell on very large volumes, very high volumes. In fact, volumes were almost 4 to 5 times the typical 5-day average. And in fact, even today, the fall continues. Now, what's actually happened is that the stock as well as, market as well as brokerages have actually reacted to a couple of news reports that have come up that state that the power minister is in talks with Power Grid to purchase PFC's over 52% stake as far as REC is concerned. At this point of time, it is very important to note that neither the power minister, neither the power ministry, REC, PFC or Power Grid have given any official comments on the same. So we are still awaiting clarity on that front. Now, what's actually happened is that Jefferies has done a scenario analysis if this particular development does come to fruition. So what Jefferies is saying is that so far other PSUs have made investments outside on ministry directives. But when you're talking about Power Grid has remained relatively insulated, and which is why there were never any capital allocation concerns as far as Power Grid is concerned. Now, what they're saying is that if this particular deal does happen, they're saying that the dividend yield could be significantly lower at 4% versus 6% in FY23 that they had earlier estimated. Now, also what they're saying is that this is a near-term dampener for sure and could negatively impact the EPS by 3 to 5%. Also, what they're saying is that the multiple that the stock is currently enjoying could also get negatively impacted, and which is why Jefferies believes that this particular development could be a near-term overhang leading to a cut as far as valuation multiples are concerned.
Bye for clarity from many of those parties. Vivek, thanks so much for joining in and filling us in with those details. For the time being, we'll wrap up on Chartbusters. Stay with us. Trading Hour comes up next.